Hello, hello, hello. Good afternoon, everyone. Hope we're doing good. 2024, and we are back. How's everyone doing today? If you guys could give me a quick audio and screen check. Make sure you guys are seeing the dollar index monthly chart. All good. Awesome. Thanks, Tanisha. Thanks, High Speed Momentum Trader. Thank you. Market Madness. Thank you. Olawale. All right. What's going on, Ahmed? Great to be back again. Hope you had a great holiday. Sure did. Hope you guys did as well. The opening beat really hypes it up. Yes. Part of the YouTube swag. Anita, hello, hello. Momentum Trader, my man. Good to have you. Danisha, Papa Vlad, what's going on? Christopher, 2024, let's do this. Glad to have you back with us. Glad to be back. Glad to be back. Back in the saddle again, 2024. New opportunities, new money. Looking forward to it. Matthew Davis, excited to learn. Excited to teach. Let's get into it. Christian, what's going on, my man? Good to see you. Good to see you. All right, 82, we got a full house. Matthew Davis, can mentorship people get free Adora logos for priority with questions for these streams? Yeah, I'll see what I can do, Matthew, but I'll be looking in the Discord for your guys' questions for the private students, because obviously I'm going to prioritize the clients I have an obligation to. And again, if you guys have any questions, just drop it in the Discord, you guys, and I'll get you squared away, my team of analysts and I. Joe, what's going on, brother? Latrice, hello, hello. Greetings from Zambia. Awesome. Sal in the house, what's going on, brother? Good to have you. All right, everyone. So let's go ahead and get into it. So again, back in the saddle for the new year here, 2024, and looking forward to getting to work. I think this year we're definitely going to be seeing a lot of volatility and lots of opportunity as a result, because that's what we need as traders, volatility. And then world events, things that are going on, I think that's really going to rev that up, and they're going to use that as a smokescreen to exaggerate price delivery. So just my prediction going into this year. But that's a good thing for us as traders. More opportunity is more money. So with that, we'll go ahead and get into it. So one thing I want to touch on here is the economic calendar before we get into it. So no high impact news drivers until Wednesday. And then that day we have the bond auction. But the only reason I bring that up is because we have CPI on Thursday. If you guys do want a detailed write-up of how we're using the economic calendar, how we're looking at COT data, and what we're looking at in terms of earning reports. All things every professional trader needs to be abreast to. So we will be doing that in our newsletter. Told you guys we were coming hard 2024. So we will have a newsletter, and we will have a blog section on the website where we'll be providing that information at 6 p.m. every Sunday. So to not take any of the thunder away from that, I'm not going to be touching on that much here, but just want you guys to keep in mind that we do have CPI Thursday. And then the rest of the details will be discussed at length in our blog post. So the link for that, we'll drop that in Telegram, so you guys can put your email in and get signed up for our blog, and we'll be providing value in there as usual. So with that, let's go ahead and get into the business now that we got that out of the way. So here we're looking at the DXY monthly chart. So because we have not been on here in a little while, I'm going to do a little refresher on what we have been seeing and now what we're seeing as a result, just so we can get back in the swing of things. I just want to let you guys know it is really the second officially, but really the first for me trading week of the year. So keeping expectations light, not looking to do a whole lot. I want to see the market unfold. I want obvious, clean, one-sided price runs, and we'll go through what we're looking at, and it'll be just lovely. 100 people, awesome. And then another thing I did want to thank you guys, actually, before we get started, hold on. Thank you guys very much. We did reach 5,000 subscribers while I was on holiday. Very grateful for all your guys' support and motivation throughout our YouTube journey. For those of you guys that have been with us from the Telegram days since day one, you guys have seen the growth, and we're excited. We're excited to keep growing. So I did want to thank you guys for all your continuous support. And I'm going to keep providing the value as a result. So let's go ahead and get into it. So we're looking at the DXY monthly chart. Let's get that on the full screen. So as you guys know, last year, after we made this significant low, we were calling this market higher. We were unable to get up to that midpoint here of this inefficiency on that monthly chart, which was not bullish. And then we pulled back, and then the latter 2 months, November and December of the year, wasn't terribly interested in monitoring this market, but we did get a nice drop lower. And then we traded right into this wick, 50% of that, we hit that on the downside. So once we hit that, we've seen the market retrace, and now we're at the consequent encroachment or midpoint of this wick here. So those are the key levels I'm monitoring on a monthly chart. Not a whole lot of monthly clarity. We're still inside of a bit of a consolidation profile on that monthly chart. Gun to my head, based off what we're looking at in the present market structure on a weekly and lower time frames, which we'll get into, I am looking for this low here, which is the previous year's low. So that's significant on a higher time frame. As you guys know that have been working with me, I teach you guys that we need to label our liquidity because it's significant. It's not just random swing highs and swing lows. It's time-based liquidity that the market's going to refer to. So there we have previous year's low. Again, a gun to my head type scenario. That's the draw moving forward just based off the present market structure. Again, because it is early in the year, I'm not too interested in making a bunch of bold calls and calling this market longer term, simply because I just want the market to show its hand and have that clarity moving forward. So monthly chart, I'm looking at this as open, Judas swing, and then I want to see a weak bearish close. So I'll tell you guys what will invalidate that in the lower time frames. But again, just presently from what we're seeing, that's what I'm favoring. All that can change next week. And then as you guys know, we'll simply adjust and get in line with what the market's showing us. All right, so weekly chart, again, we saw the decline lower, traded higher above all these highs here that we were looking for last year, unable to continue to mount the rally, consolidated, and then we broke down. So what I was looking at going into last week, we have been calling dollar higher just in the short term. I'm still longer term bearish. I'm not trying to call a bottom in this market, but we were short term bullish into this weekly inefficiency and this weekly bearish order block. As you guys know, we were calling dollar higher across on Telegram and in our private community as well. And again, that translated to what? Lower prices in the indices, which we were calling all week. So we hit the low of the weekly bearish order block. We repriced into that beautifully. That was my upside target this week. And then I wanted to see how we traded there for more information. Do we continue trading through it, displacing, or do we hit it and break down? And we ended up seeing a breakdown. So that's why I'm favoring lower prices longer term, just based off the present market structure that we're seeing. So one of the factors that weighed into why I was looking for higher prices on the weekly chart was we have this inefficiency here, extending that through with the midpoint, which we refer to as consequent encroachment. Look at the bodies respecting that midpoint. That's an algorithmic signature that tells me this market is bullish in the short term. Can we switch gears and get above this order block? And then I would concede, say I'm incorrect. And again, get in line with what the market is showing us. I'm not here to be right, wrong. We're here to make money. So if the market does show a willingness to want to get up through this up close candle here, then I will look for these equal highs here, and then we'll have upside targets if we have to pivot in that direction. But for the time being, all I'm seeing this as is a short-term retracement into a short-term premium. So again, we do want to monitor how we trade inside this weekly inefficiency and this weekly bearish order block. So the fact that we hit that, we were unable to sustain these premium levels, and then we saw the market break down. That's indicative to me that we're still in an underlyingly weak market. And then we will confirm this with bonds and yields as we always do. So that's what we're looking at here on the weekly chart. Let's keep going through this daily chart. So I am still seeing this as we are on the sell side of the curve. Again, I'm not going to try to call bottom in this market. All I'm seeing this as I was saying, was a retracement higher to a short-term premium. How did I get the dealing range that we're in? This high and this low. Extend that through so you guys can see that. So this is the dealing range that we're currently trading in. We created a swing low, and then once we saw that swing low and impulse move back up into the range, that's how we were confidently calling this market higher. And then as a result, seeing that risk off scenario with lower indices. So we repriced higher. You can't really see it too well, but there's smooth highs here on the daily chart. That'll be much more clear on a 4-hour or hourly chart. And that was our draw for the week. That's what I was looking for, higher prices. And then above that, we have this inefficiency here, and then we have this breaker, bearish breaker. So I don't have it on there just for cleanness, but you do want to monitor this moving forward. So as long as we remain below this bearish breaker, I'll go ahead and just highlight that so you guys can see what I'm referring to. As long as you remain below this, I will continue looking for lower prices. If we get above this bearish breaker, then I likely am going to suspect we're going to go higher, and that's going to warrant a run above these highs here and here. So again, we're below the bearish breaker, I'm looking for lower prices, and I'm going to be looking for risk on going into this week, which means, or which is going to translate into higher foreign currency and higher stock market as a result. So again, this is the dealing range that we're trading in. We traded a premium. I wanted to see how we traded there, and then we ended up rejecting lower. One of the things that puts the analysis in a 50-50 place for me is because we're in a deep discount. We traded into that weekly fair value gap, found support, and then we traded higher into a short-term premium. But look at where we're trading at. So if the equilibrium price point here is 102.440. Looking at the close on this daily candle over here, we see that the close is 102.435. So 5 pipettes of variance from the dealing range equilibrium. So whenever markets are in equilibrium, it's predisposed to be lower probability. Not to say there's not scalps, there's not intraday setups, running session highs and session lows, but I don't have tons of clarity when we see a market in equilibrium. And it's more predisposed to consolidate and show seek and destroy types of profile as long as you remain near equilibrium. So that's why I'm more reserved in my analysis this week. I'm not as dogmatic as I typically am, calling a market either higher or lower with a great deal of confidence. Right now, I simply don't have that. So that puts me in a place where I just have to wait for more information. And that's fine. That's what the way professional trading is. Sometimes we need to wait for more information for one-sided setups. When I was doing my analysis this morning, I noticed myself really having to look hard to analyze it. And not that I'm not usually, but I noticed I had to do a lot more than usual. I had to pull up COTs, I had to look up data ranges, I had to look at the bond market, the yields, and really break all those down to get the clarity I wanted. And even then, it's still indecisive. So if you ever feel yourself reaching, trying to force an analysis, nothing's really jumping out to you on the chart, you've been looking at it for a while, that's probably one of the surest signs that it's not a high probability condition. Because the way I define high probability is I like to see something that's one-sided and it's not easy to justify the other direction. And here in the present market structure where we're at right now on Sunday, I don't have a great deal of clarity in terms of whether this market wants to expand higher or lower. Based off the higher time frame, based off the order flow we're seeing, I'm going to assume it's bearish and I'm going to continue calling this market lower and expecting it to do so as a result. But for right now, not having the clarity that I would typically look for. So again, it's a wait for more information type of market. And I'm going to go into T-bonds and the yields to further confirm and give me more clarity on DXY. But I did like how we traded up. We hit that weekly bearish order block and daily breaker. And then we saw a nice rejection lower. But what we also saw inside that daily fair value gap, go ahead and mark this here. Perfect support at the upper quadrant. So as you guys know, higher time frame and efficiencies, we don't just use midpoint. I like to use the upper and lower quadrant for more information and more key levels. So that ended up rounding out our low of day on Friday. And I would have liked to have seen a heavier close if this market was to remain bearish. So all these factors that I'm articulating to you guys are what communicate to me that we're not in a clear one-sided market. And whenever that's the case, that's when markets can typically consolidate. They can go sideways and create seek and destroy conditions. So if that does occur Monday into Tuesday, with there's no high impact news drivers, then it wouldn't be surprising to us. So that's how market structure, economic calendar, how those things kind of dovetail together. And again, that's something you'll get a better feel for over time and just really doing it and seeing the markets. So that's what I'm weighing out now. What I like to see when a market's at equilibrium is I like to see a sudden movement higher or lower. And typically wherever that energetic run occurs from equilibrium gives us a great deal of prognostication as to where the market's likely to go longer term. But again, right now, I don't have that. I'm simply waiting for more information. Once I'm able to ascertain that information, I will be providing that to you guys in, again, the private community and our social medias such as Telegram, Twitter, and such. So that's what we're looking at here. Let me check my notes, make sure I covered everything. Awesome. All right, so let's keep refining this, dropping down into the 4-hour chart. So again, we were calling this market higher. We had the high here and then all these equal highs. So that's a really strong draw on price, obviously, because there's a lot of buy stops there. People that were short, they're trailing their stops there. So that's a really nice target for the market to want to reprice up into, which is, again, why we have our targets hit, because we know what the algorithm's going to want to refer to. And again, just looking at the dealing range, it's not actually on this chart, but it's this high to this low. And again, the market's just reaching up for a short-term premium. As I tell you guys, I like to see how the market trades in premium if I'm bearish. So we saw the market trade higher, clear out the, well, actually this high cleared out these stops, and then they dropped it. So the way I'm looking at this as is this one cleared the stops, and then this one traded lower. So early shorts were stopped out. And then we got an aggressive breakdown through this low. This is a significant low in my analysis because it rebalances this inefficiency. So the fact that we broke down through that, that's something that likely warrants lower prices currently in my analysis. So what I would have to see in the lower time frame for that to remain true is us remain below this 4-hour inefficiency. So as long as we remain below that, I will be looking for lower prices in the DXY. If we get above that on a closing basis on a 4-hour or hourly chart, closure above this inefficiency likely tells me we're going higher and we're going to look for a deeper premium. So those are the two scenarios I'm looking for. I do favor us selling off from this fair value gap. So if we sell off from this inefficiency, first target will just be the Friday's low. And then through Friday's low, we have this wick here. That's just Forex shenanigans. I discount this in my analysis. I'm not looking at this. So through this low here, we have this inefficiency. That'd be a nice second target. And then how we trade there will be influential. If we get through that, then we'll likely take out this swing low here. But if we do not get steam on the downside through this low, then we may just reaccumulate and go higher. So those are all the things I'm weighing out. And again, it's not as, what's the word I'm looking for? Sharp, crisp, to the point, because there's a lot of different things I'm having to weigh out. It's not like many of the other weeks that you guys are used to, which is, okay, this is what we're looking at. Weekly expansion's higher or lower. Daily bias is this, and these are the targets, and it delivers like gangbusters. I just don't have that right now. Will we have it next week? Who knows? We'll see. I'm assuming next week we'll have more clarity, and that's what I'm looking forward to. So hourly chart, again, this is the smooth highs that we were looking at here. Traded higher, calling that beautifully. And then again, traded higher once more on the non-farm payroll release. So sweeping buy side once more, reaching for a deeper premium. And then we got a sharp breakdown here. So let me go ahead and zoom this in. Sharp breakdown through a key low here. This is the key low because it's an intermediate term swing point, because we have a short-term low at each side of it. So the fact that we broke down through that, that's a significant market structure break in my analysis. So what I'm going to be expecting inside this weekly fair value gap, if we're going to be bearish, is I would like to see some type of high of week manifest inside this premium array. And then if that does, if we start to break down, then that would give me high probability for looking at longs in the euro market. And I'll cover why euro and not pound. I don't like pound. I'm not liking what it's communicating to me. So I would opt to trade the euro dollar, and I'll cover those points once we get into it. So that's what I'm looking at here on the hourly chart. Again, I would want to see weakness in here with that midpoint. Prefer to not see us close above midpoint. If we do and reach the high end of this, then the market should aggressively start giving us sharp down close candles. Another reason I like lower prices here is we got this phantom trend line. So again, this wick here, that's again just Forex shenanigans. That's why I'm not too keen on this market. I prefer a market like futures. But I'm discounting this. So don't look at that as like a run on liquidity or anything. I don't look at it like that. We have a trend line here. Look at how these lows here line up to here, here, and here. So we traded into that, but I think we're going to see a deeper run into this phantom trend line. So that's what I'm favoring. And again, I'd like to see it occur from that 1 hour inefficiency. This bias is invalidated if we get above the hourly fair value gap on a closing basis. If we do that, then I'll concede and I'll look for lower prices and again, get in alignment with what the market's showing. So with that, let's go right into bonds. Cyclops, Happy New Year to you, Dylan. Hope you had a nice and peaceful holiday. Sure did, my man. Sure did. Hope you did as well. And again, looking forward to a new year with you all. Matthew, would we typically consider DXY 4-hour chart? Have it be a breakaway gap above because we were within a breaker? That's a good point, Matthew. So yeah, last thing I'll touch on DXY. That's a good point, yeah. So because we have that daily breaker in here, if we are going to remain bearish and that's going to be the narrative, then I will see this left open because that's when breakaway gaps manifest. is if we have a breaker. There's a couple other conditions, but just in the present market structure, because there is a breaker here, I'm not looking at this like, oh, inefficiency, we need to trade up there. Because the breaker in the market structure is communicating to me, we don't need to go any higher. And if you guys are liking this, be sure to support your man and hit that like button for me. I know a lot of you guys like to just get the free value and not hook a brother up, so be sure to help your man out. All right, so monthly chart here for T-bonds. So I use this again for those of you guys that are new, starting a new year, and we do have quite a few new subscribers. So I use bonds simply as a confirmation for dollar. I don't trade dollar or bonds, but I use them for more information for that risk on, risk off relationship, which then gives me more clarity when I'm trading stock indices, which is what I specialize in. I trade the futures market, more specifically the stock indices. I will trade Forex. I'll swing trade them on higher time frames if I see those opportunities, as we called them out all last year, but also once in a while crude oil. But for the most part, my money's made in the indices market. I'm a specialist, and you want to be a specialist as well. So looking at the monthly chart, as you guys know, we were calling this market lower all last year, looking for the sell side here, these relative equal lows, and this monthly inefficiency. That delivered beautifully, and then that was right where the low manifested, and then we pulled back up into the range. So what I'm interested in seeing now on a monthly chart, and the reason we're looking at the monthly is because I want you guys to have a longer term perspective for what we're looking at. Because again, that gives me more of my macro analysis, which is monthly, weekly, combined with COT and IPTA data ranges. But we'll teach on all that later for those of you guys that are in my private community. So this is what I'm looking at here, this monthly bearish order block. So we have this opening price here on these two consecutive up close candles before we got the rotation lower. So we traded up into that opening price, and then I want to see how we trade there. Do we reject, or again, do we continue displacing through that? And that gives me more information when it is that we do drop down into those time frames. So if we are going to continue bearish, if we are going to continue this bearish order flow in T-bond market, I would want to see a sell off from here. But again, because we're bullish, we're seeing higher prices, I'm not going to look to try to call a top. Again, which is why I'm just having to weigh these factors out going into this next week, maybe into the next 2 weeks. So that's a key level. You want to watch this bearish order block and then see if we have a willingness to sell off there, or if we start trading up into it. And that'll give us a great deal of prognostication for what the dollar index is likely to do. So weekly chart, again, trading lower, hitting that key level, running the stops here, trading higher, shifting market structure, and then we've seen higher prices throughout the last couple months of the previous year. So what I was looking at on this market when I was just doing personal analysis, don't want those on there, was just equilibrium, and I was expecting a run above equilibrium. Again, we're very oversold. We don't need an indicator to tell us that. We're seeing lower prices. We're in a deep, deep discount. We've taken sell side multiple times. So that's how we know we're oversold, again, without needing any indicator to tell us that. And we saw the swing low manifest. So I was looking for a run higher into a short-term premium, which we've seen here. And then what I want to see and what I'm going to be watching moving forward is this weekly inefficiency here in premium. And we saw a nice reaction there. Candle tried to trade up into it. Weak close showing an unwillingness to be able to do so. And then we got the market pull back into the range, which is again another supporting factor for why we saw higher prices on the DXY. So what you're going to want to monitor going into this week for bonds will be this inefficiency here. Notice how we closed above that. That makes me reluctant to call this market lower. If we were to have smashed lower, closed below it, then that would be much more decisive. But again, just because we're seeing higher prices, we're seeing bullish order flow, I'm not going to look to try to call a top in this market. So again, we're pretty much in no man's land. We're below this inefficiency here, above this one, showing respect of it and showing respect of these. So weekly chart, not really doing much for me. So you guys can see why my analysis is a lot more 50-50, requiring more information. But I'm also not just leaving you guys with, yep, it's 50-50. I'm also telling you guys what factors I'm considering that would make the analysis not 50-50. Oh, and guys, for those of you guys that are asking questions, please do not think I'm ignoring you. It's quite a bit to manage my focus on here and all the comments as they're going through. So if you have a question that's pressing, drop it in the Discord, or if you're not in the Discord, in the Telegram, and we'll do our best to get to those. But again, the priority is going to be our clients that we have an obligation to in Discord. So if you guys don't get your questions answered, I'm not ignoring you, just having to maintain my focus here. but I will get those answered for you. So daily chart, we've pressed higher into a premium. We have that monthly bearish order block in here, and that's where we got the reaction off of. And again, I say this a lot, but you do have to keep in mind the higher time frames and show those PD arrays as you go down through the time frames. So don't get lost in the price action as you go down. Again, the monthly, weekly, daily, they're in descending importance. So the higher time frames are going to have much more significance over price action than your intraday time frame. So it's really important to have the key levels annotated as you go down through the time frames. So monthly bearish order block aligning with the daily inefficiency. We saw a 3 drives pattern here, which is swing high. Another swing high into that, and then we broke down. I don't care as much about the pattern. The 3 drives pattern doesn't tell me anything in and of itself, but what it does give me is a narrative. The fact that we're pressing higher into buy side. Each time we create a swing high and drop lower, create a swing high and drop lower, what that's doing is people are trying to sell that short. So each time the market presses higher, that communicates to me that early shorts are stopped out. So when the real run happens, retail's demoralized. They can't get back in because they've already got stopped out. So I like this pattern because it gives me a great deal of narrative moving forward. So what we're looking at here, again, we saw this 3 drives into the monthly bearish order block. Very important. And then we saw the breakdown into this daily inefficiency. So is this a retracement to continued expansion, or is this an outright reversal? I don't know. I'm gonna have to wait for more information. So how we trade inside this daily inefficiency here and here will indicate that to me. Because again, we're still seeing the body supported there. We traded into this one, the wick did, but the body's closing above it. That still tells me this market is bullish. And again, I'm not gonna try to call a top in this market. We have traded into a premium, we're overextended. So a retracement is warranted. So is this a retracement to expansion or a reversal? That's what I'm gonna be watching throughout this week. And then we'll use the yields to further solidify this. But we did trade up into a deep premium. So one of the levels you'd want to have on your chart is this inefficiency here on the daily chart. That's a key level I'd be watching moving forward and seeing how we trade there at all the key levels that we're trained to look for. So let's keep it rolling. And I'm going to make yields short and sweet, not much to talk about there. So we got the 10, 5, and let's get the 30. And we'll just go right to the daily chart. Again, just get right into the business here. So again, we're seeing that bearish order flow. We're still on the sell side of the curve. I don't try to call bottoms. It's a loser's game. But I'm also not going to call this market lower because of these factors here. We did a 3 drives in a deep discount. So there's different factors I'm having to weigh out. But we did trade higher into this inefficiency. We hit this bearish order block here, which is the last 2 up close candles. Here, last 2 up close candles. And then here, last 2 up close candles. So what I'll be interested to see is how we trade inside these inefficiencies moving forward. If we're going to be bearish, we will sell off from here. If we trade higher and we close above it, then I'll have to concede, say this market's going higher, and then I'll also look for higher prices on dollar index as a result. So again, there's an ebb and flow to all these markets, but it's this understanding that unlocks the clarity that professionally minded traders have. And that's what I'm sharing with you guys here. So that's what I'm weighing out here in the yield market. So again, you're gonna have those key levels on your chart moving forward to let us know what dollar is doing. And then let's get into currencies. So again, not much to talk about on currencies, but we'll keep it moving. So monthly chart, again, we're just still in a bit of a consolidation here. So monthly chart is not that helpful. Last year, I was favoring a drop down into this inefficiency, just as we saw dollar trading higher into its premium inefficiency. It did not do that. It was unwilling to do so, which indicates something to us in and of itself. But because we're still in this higher time frame consolidation, you do have to be more nimble and agile in these types of market conditions, which is again why Forex is a market I don't opt to trade. Before, when the ranges were open, it was delivering nicely. Forex was a much better market to participate in. But because of what we're seeing now, these are market conditions that indicate to smart money that it's probably not going to do a whole lot. So that's what I'm looking at here. Monthly chart for euro, you want to have this consequent encroachment of this the wick on your chart. You see we just hit that right there. So do we sell off from there and run for the equal lows here in this inefficiency? Who knows? Or if we run higher, I don't know. That's what I'm going to wait to see in the lower time frame and have that confirmed with the dollar index, because the dollar is going to tell me where euro and pound's going to go. All right, so let's just go right down into the weekly chart. So weekly chart for euro, again, we traded lower, cleared out these equal lows as we were expecting last year, and now we've pulled up into a short-term premium. So we have this weekly bearish order block right here, this last up close. We hit mean threshold, which is midpoint of a body. So we're looking at the bearish order block, hit the mean threshold, weak close, unable to sustain the premium valuation, which indicates something. So the fact that we hit that, broke down, and now we're seeing this candle sell off, we hit the bullish order block in here. So again, because we're in these key PD arrays, I can justify this market going higher. I can justify it going lower. It's a scalper's market for me. But what I would want to see is one of these premium arrays give way. Do we trade through the bullish order block, or do we trade in here, reaccumulate to continue higher? That's what I'm going to be watching Monday going into Tuesday. And hopefully by then I would have been able to have procured that information. Pound, bullish order block in here, traded down into that. I was expecting a run lower, so I was incorrect in that last year. I did want to see this market accelerate and gain steam, just as I did want to see dollar on the upside. It didn't do that, traded down to a short-term discount, and then found support inside this bullish order block. So look how many times it referred to the wick midpoint. So this wick, the midpoint, hits it once, twice, 3 times, 4 times. Smart money is being offered that level to do their buying. Then we trade higher, swing high, violated, market goes into a buy program, and then we reprice higher. So we're trading inside this weekly bearish order block in here. So look at the resistance, to use a classical term, as to how we're not able to get above that. So that to me is indicating a market that is not decisively strong. So the fact that we tried once, twice, and then broke down is telling me this market isn't overly bullish. But again, I'm not going to call a top in this market either, because I don't have that clarity on dollar. So I'm not going to opt to trade pound, and I'm going to drop down into a daily chart and further show you guys why. The market structure in here is very crummy. We don't have a lot of inefficiencies. We don't have a lot of clean structure to work with, sweeping short-term highs, short-term lows. So again, this isn't a market that I can give you guys a great deal of prognostication in, simply because of the market structure that we have here. This is abysmal. I don't want to touch that. I don't want to risk money in it. I'm not interested in it at all. So if I do swing trade currencies, if I do get that clarity on dollar, which I'm assuming we'll get Monday going into Tuesday, but we'll see. If I do get that clarity in the intermarket relationships, then again, I will be swing trading currencies, but not pound. And I explained to you guys why. So let's go over to euro. So here we see the market structure is much more clean. Nothing compared to indices, because indices obviously are much more cleaner than this, but this is cleaner than pound. So again, we traded higher into the short-term premium here, and then we dropped down. So what I'm looking at this as is the same thing as the XY. We traded into a short-term discount. How do we trade there? Is the market going to show support, a willingness to rally? Or are we going to use this fair value gap as a means to break down and sell short? That's what I'm weighing out. Again, we're trading right at equilibrium, which is when markets can consolidate, create, seek, and destroy, and go sideways. So if that does happen, don't be surprised. But what I am looking for is for us to decisively displace either higher or lower. Which way? I don't care. I'm just here to make money, and we just got to know what way it's displacing. Either way is irrelevant to me. So that's what I'm weighing out here in euro. And then again, we'll have more clarity on euro once we have that clarity in the DXY. All right, so with that, let's go into indices. Let me check my notes, make sure I covered everything. Sometimes I get done with these sessions and wish I would have covered some other things that I forgot. All right, awesome. All right, so let's do this. Fun fact, your order block on the ZB 1 month chart is not an OB. Oh, awesome, Milos. Please enlighten us then. All right, so weekly chart here. We've seen this market press higher. We traded into the discount, clearing out these lows. So what am I referring to as premium and discount? Go ahead and show you guys that. So this high to this low, we traded into a discount. So what I wanted to see was how we traded there. As you guys know, going into the last year, we were calling this market lower to these specific levels. And then again, I want to see how we trade in discount. Then we ended up seeing an aggressive expansion higher. And then while I was on holiday, not interested in the market these weeks, my analysis was calling for higher prices to the equal highs here, here, and here. So we've traded above that. We've cleared out the external range liquidity, which indicates to me that the market is due for a retracement, or we're overbought, just to use retail terms that many of you guys are probably more familiar with. This is the overbought market. It's overextended on the upside. So it's reasonable to do what? See the market retrace. So this weekly candle was what? An expansion lower. Myself, my community, we all knew about that ahead of time, and we were indeed calling this market lower since Tuesday, which was the first trading day of the year. And then we traded down into this weekly inefficiency and then hitting that midpoint beautifully. So just a beautiful delivery on indices. And then you guys can see how this is a totally different market than what the foreign exchange is showing us, which is why I don't prefer to trade that market. Intraday, I'll swing trade it if I see opportunities, but again, this is my focus. This is where I specialize. So now that we've traded into this fair value gap, because I don't call tops in markets, is this just a retracement to continue higher, or are we reversing and turning the tide completely? I don't know. I'm willing to just wait for more information and let the market show me what it wants to do. The fact that we hit midpoint and we were unable to really accelerate through that indicates to me that this was a retracement just to go higher. So again, because I avoid calling tops, I'm going to say this market is bullish and I'm going to be looking for higher prices as a result. And then again, if it indicates something else to us, then we'll just have to pivot and get in line with what the market's showing. Same thing here for NQ. NQ was much weaker this week. Again, as I was calling out to my community, we were expecting NASDAQ to be the weaker leader on the downside. And then we see it actually got almost a full repricing down to its inefficiency low. So we got that delivery there. And then that was the last downside target that I gave this week. And then I think it delivered within 5 handles. So 5 handles off, not terribly disappointing. So we got that delivery into this inefficiency. And again, I'm wanting to see how we trade there. The last thing I want to cover on the weekly chart is we've seen 9 consecutive weeks of the market pressing higher. So it's reasonable to see the market retrace. How far are we going to retrace? I'm not sure. That's what I have to look for in the lower time frames and also with the dollar index. So once I have clarity on the dollar, it makes my trading indices much more cleaner and gives me a lot more visibility moving forward. So what I'm going to want to watch again is the other instruments that we've already looked at, so I can get a better feel for that risk on, risk off. So if we start to trade through midpoint, this midpoint here on that weekly chart, if we start to trade through that with animation, with speed on the downside, then that's going to indicate to me that this market's likely going to keep reaching lower, and then I'll look for discount levels. And then again, same thing here for NQ. So if we start to accelerate through this inefficiency, my attention will go to that swing low here, and then all this inefficiency we have here on the upside delivery. But that's if we start to accelerate lower, and then we get higher prices on dollar index. So daily chart, again, we pressed higher into the buy stops here, short-term high, cleared that, formed a swing high, broke down, running for the sell side here, and that weekly inefficiency that we were talking about. So the reason I was looking for this specific inefficiency, and more specifically, the consequent encroachment or the midpoint here, is because looking at the discount to premium, we have equilibrium. So because we got a swing high, because the fourth candle pushed into the range, that indicated to me the market was going to want to seek a short-term discount. So now that we're in discount, after I called this entire week lower, each daily candle, we were looking for what? Lower prices. Did it provide an expansion lower? Every single day to the levels we were looking for. So now that we've hit these levels, I'm interested to see how we trade there. How do we treat the midpoint? Do we use that as a support, as a launch pad to trade higher? Or do we start to close through that and show weakness and run for the sell side? I'm not favoring that. I'm favoring this as a run lower, stop run, and go higher, simply because I don't like to call tops and bottoms. What I will give you guys, though, if we are unable to trade higher and we start to see rejection inside this breaker here, then that would indicate to me that we're likely going to see lower prices. So that's how I'm weighing these things out. If we're unable to get speed on the upside, then I will look for lower prices. So because we've traded into a short-term discount, this market should aggressively start repricing higher if we're going to be bullish. If it does not do that, then that gives me a great deal of visibility moving forward that we're not likely to continue doing so. So same thing on NQ, swing high, traded above that, broke down, repricing all the way down to the low end of these inefficiencies. So just a nice delivery. last week, repricing down in the low of the daily and weekly fair value gap. So NASDAQ is much weaker than E-mini S&P. So that's something to consider moving forward. And then if we do trade higher, we have an inefficiency here, which would be a nice target. And then if we get through that on a closing basis, my attention would go to this inefficiency here. And then I want to see how we trade there, again, at all the key levels that we know to look for. And then if it starts to show me signatures that it wants to break down, perfect, I'll get it in alignment with that. If we continue displacing through it, then we'll look for higher prices above this high. So that's what I'm weighing out moving forward. So 4-hour chart, again, stops here, cleared out, and then we got to break down aggressively through this low. So there's our market structure break, turning the tide of the market longer term, equal lows here and here. That was our target on the downside from all the way up here. Calling the market into these levels, and then through that we had the weekly inefficiency. So we traded down into that weekly inefficiency here, which is that blue rectangle. We hit the 4-hour bullish order block, that opening price perfectly. And then that set up our nice TGIF back into the range. So what I'm interested to see if this down close candle acts as support. If it does, then I will look for higher prices. I'll look at this as a retracement back down into a discount to continue higher. And that's what I'm favoring. But if we do get below this down close candle and we take out this low here, then I'll look for lower prices and adjust to what the market is showing me. Let me make sure I'm touching on everything. All right, so same thing for the NQ on the 4-hour chart. So we have these smooth highs here. Let me go ahead and zoom out. We traded into this 4-hour bullish breaker here. Low, lower, low, last up close, extend that through. Found support there, and then we rallied higher. And again, that set up the TGIF retracement back into the range. So we also have smooth highs here. So as an intraday trader, which was what I am, I'm an intraday trader, I day trade and I scalp. What I use is a daily bias to give me clarity. If I don't have that clarity on a daily, weekly chart, I have to go down into a 4-hour, hourly, and 15-minute, and then I'm using that as my higher time frame, running session highs, session lows, previous day's high, previous day's lows, and that's all I'm doing for my trading. Surgical, in and out, not overstaying my welcome. So if I don't have that clarity again on those time frames, that's what I'm doing. So smooth highs here, that's what I'd look at as a draw early next week based off what we're seeing. We hit the bullish breaker, so I'd want to see these equal highs taken out. And then I want to see how we trade there. If we're going to be bullish, I'd want to see the market. Hold on, get the charger on. If we're going to be bullish, I'd want to see the market trade above these highs and displace through them and make a run for this inefficiency. What would not be as bullish is us take out the highs, reject, and break down. So what we do at those highs will indicate to me what we're likely to do moving forward. And then again, just to refine this further into the hourly chart, whenever I see a trend line like this that's really smooth, that's just something that's a glaringly obvious draw on liquidity. So we hit the midpoint here of that weekly midpoint, and then that 4-hour order block, and then we saw a displacement from a key institutional level. So whenever I see displacement from higher time frame institutional levels, that tells me a lot. That's what I'm doing with my trading. I'm looking to trade off higher time frame key levels because that's where the institutional order flow is going to come in around. And I want to be trading in line with those players. So the fact that we traded lower, we hit that midpoint of the inefficiency with time, which is what, Friday after a bearish week, we see the market retrace, and that's what gives us the prognostication for the TGIF setup. So what we're looking at here is we got a displacement higher. So I did like to see how we displaced higher. And then we have that 4-hour order block, and we have this fair value gap in here. So what I'd want to see is if we remain supported inside this hourly inefficiency, we'll likely run above these highs. And again, how we trade there, just as I discussed on NQ, will be significant. Do we hit it, reject, or do we hit it and continue trading above and likely make a run for these smooth highs here? That's what I'll be favoring. So if we get displacement higher through these highs and we trade aggressively above them, my attention will go to these highs here. This downside inefficiency here on all this delivery from this candle's open to here, that's all one-sided delivery. That would be a next target, and then we have these smooth highs here. That would be my upside target on E-mini S&P, as long as we get lower prices on dollar, and again, all the intermarket confirmations that we would look for. And then again, hourly chart, just to refine it further, same thing here on NQ. So we see respect inside the bullish breaker, Now we have smooth highs here. And we traded down into the bullish order block. So I want to see how we trade there. Will we run up into these equal highs? That's what I'm favoring, but who knows? We'll see what Monday, Tuesday gives us. Monday's not a day I like to trade, especially after non-farm payroll, where we get a lot of volatility. Typically, the morning session after NFP, which is Monday, will typically be muted. So that's what I'm going into my analysis expecting. If it does run, so what? There's plenty of other price runs. So that's what I'm looking at moving forward. And nice. All right. I think that'll do it. So I'll go ahead. I'll look to take a few questions. If not, we'll keep it rolling. Institutional trading isn't until the SIBI low resistance liquidity run. Yeah. When we trade through inefficiencies, that's low resistance. All right. I'm going to try to find the members on there. I'll do what I can. Matthew Dillon, why do we retrace so much on the 1 hour chart for ES back to the OB? There's a breaker there. Let me see what we're looking at. Which are you referring to as the breaker? This one here or this one here? Dustin Reiber, these aliens are causing the 50-50 market. Let's be real here. Yeah. Like I said, it's going to be an interesting year. Wait till you guys see what they pull out this year. It's going to be something else. Second one, the small bump. Okay. Yeah, I see what you're saying there. So like if you look at a 4 hour chart, not 4 minute, 4 hour, that level's not even there. So that's why I don't really refer to it. And that's why I'm looking at this bullish order block in here. So that's why I specifically would be looking at this level for a return to discount, which is what we saw. From this low to this high, once we created that swing high, the market just pulled down into a short-term discount, and then they held it there the rest of the PM session. Again, I was expecting a run above these highs in the PM session. They decided not to do it and hold it in a consolidation, so I'll be expecting them to do that run into next week. So that's what I'll be looking for. Anita, everyone hit that like button. Yeah, please do. Thank you very much. Momentum Trader, he is the real deal. Just keep watching over the next few months. Appreciate that, my man. Yeah, Anita, Matthew. Yeah, there's no badges in here, but you'll be able to post your questions in the main chat. Yeah, I'll go ahead and get to those. Alex, what's up, brother? Awesome, guys. I don't think there's much more questions. ISEG, do you use consecutive candles as order blocks? Yeah, it depends on the context. If the consecutive candles are connected to the inefficiency that's created on the displacement, I'll use the consecutive. If it's just one down close candle and it is not tied to the inefficiency that made the displacement from the order block, then I'll just use the last down close candle. So that's how I determine whether I use the consecutive delivery or if I'm just using the last down close. Hugh Parker, what's up, Dylan? Can you explain how to get the dealing range? So I already touched on that in a few examples. You'll be able to look at that and look at the other resources there are on YouTube, but I actually do have that to teach this week to my students. So you're not going to take away the thunder from that. Dylan, when ICT says Tuesday is bullish, is usually the high of the week. Is that only in a bullish market? I mean, if bears. Jake, just rule of thumb for everything, my man. Everything that is bullish is reverse bearish. But again, there has to be context for why Tuesday high of the week, which is market structure, understanding economic calendar. There's different factors you have to consider. It's not just bullish Tuesday low of the week, because then it'll either do it on Monday or it'll do it on Wednesday. But there's other factors you have to consider there. Institutional trading, what is the macros that works better for you? All of them. All of them. Malik, which macros are reversals and continuations? How do I determine that? That's determined by narrative. What's the present narrative in the market? Has the drawn liquidity been reached? Do we still have levels to be taken out? Have we already hit key levels entering a macro window? You know, all those different things are things you have to consider for reversals or continuation. Xavier, any advice for someone who just started learning about trading? Anything that might have helped you get a grasp on some of these concepts? Yep, so I learned it the difficult way, which is pouring through hours and years of ICT content. So that's why I learned it. It's possible to learn it that way. Is that the most efficient? Anyone that's studied ICT for any length of time knows there's probably a better, more efficient way to learn it. But it is doable. It is doable. I was able to learn it like that with a lot of other supplementary study. I already had a lot of knowledge and understanding of how things worked coming into ICT. So that made it a lot easier for me than most people. But that's what I would recommend. So if you're learning for free on YouTube, there's plenty of resources. It's possible. You're just going to have to roll your sleeves up and work a bit harder. Ahmed Diaz, the efficient way is Adora trading. That's what we do, my man. That's what we do, my man. I appreciate it. All right. All right, guys. So we're getting here late in the hour. Let me actually check the Discord. There's probably some questions in there. Sorry, guys. First one of the year. Still smoothing some things out here. Please direct them to keep them organized on each end. Joe, that's a good question. How does a change in bonds affect the indices or its correlation overall? That's a good question, Joe. So bonds have an effect on everything. So quickly, I'll give you an overview of how the markets work. So the reason risk on, risk off is so powerful, understanding what the dollar is doing in relation to commodities, currencies, and stocks, is that you got to look at the market and the economy from a macro perspective. And once you understand the macro perspective, you're going to understand that money is always seeking yield. But we can't look at it from our myopic point of view, which is us as a trader who has, $2,000 in an account and we're looking to double it. There's so much more to these markets and complexity than just, us here trading our funded accounts and stuff. There's so much more levels to this. And that's what I'm articulating here with the macro. So the way it works is there's funds, there's institutions and banks that have billions and trillions of dollars that they're looking to put to work and seek yield. So that's why what we're doing when we're looking at all these different asset classes is we're looking at where money is going to seek yield. If interest rates are going higher, what does that mean naturally? People want to buy what? Dollars. Why do they want to buy dollars? So they can buy bonds and take advantage of those interest rates that are going higher. So if interest rates are going higher, that means money's doing what? It's flowing into dollar. Well, if it's flowing into the dollar, does money just be created out of thin air or pulled off trees? No. It has to come out of other assets. So if money's going into safe assets, safe in quotations, considering, the dollar is just monopoly money, but the system considers it safe. So the money flows into the dollar. Why? Because interest rates are going higher. So the money is chasing that yield. Money managers, fund managers, traders, people with deep pockets, that's how they trade. They're seeking yield. So if that money's flowing into dollar and bonds, where is it coming out of? Stocks, foreign currency, and commodities. So that's why we're able to track this through the candlesticks. And it tells us everything we need to know. We don't need to read anything else. We don't need to look at news, the mainstream financial channels. All those people are just there to mislead us. This is the truth. The open, high, low, and close cannot be spoofed, cannot be messed with, and this tells us everything we need to know. So that's just basically a general overview of why we do intermarket analysis, because it tells us where the inflows of capital are going into. If we start to see yields dropping, think of it from a logical point of view. Are you going to want to hold a yield that's giving you less value? Logically, no. So money's doing what? It's leaving the dollar, it's leaving bonds. But remember, there's no such thing as money heaven. So it has to go somewhere to seek that yield. Where's it going to go if it's coming out of dollar? Well, people are going to buy risk assets to seek a yield, which is going to be your foreign currency, which is going to be the stock market, which is going to be commodities. So once you understand all that, all this just comes together to give you all the clarity that we need. Ahmed, and then interest rate differentials come into place. Julian, assistant, was not there today. Thanks, Dylan. Yeah, Julian, the assistant is taking the day off. Joe, now I see why you take bonds into your intermarket analysis. Thank you. Yeah. So you do have to understand the complexity of these markets. Again, there's a lot of different things going on. And once you understand that, everything starts to piece together and make sense. So that's where macro analysis, a macro understanding of how capital inflows go into different assets, that's when all this stuff and the intermarket analysis pieces together as to why it's so precise, why it gives me the precision that I've been showing you guys all last year as well. All right, guys, so 5 o'clock, so I'm going to go ahead and wrap this up and make sure there's no other questions. Connect Tech, can you talk about COT right now? Good question, Matthew. That's going to be in the write-up that we're going to be sending at 6 p.m. So if you guys are on our mailing list, we'll send you guys the link so that you guys can sign up for that. And you guys can be abreast as to all the emails that we're going to be sending out through our mailing list. And then we'll provide that to you guys, or you can just go straight to it on our website, which is linked below. And if you go to the Learn Center, that'll be where we have our blog, where you guys will be able to see those posts and get that information. So if that covers your question, Matthew. All right, guys, awesome. So appreciate you guys joining us for the first one of the year. What did we get up to? 130, 135? Awesome. I'm happy with that. Only 84 likes, though. So I know a lot of you guys are still here mooching off the free value and not showing any love to me, who's taking an hour out of my Sunday to get on here with you guys. So be sure to show some support. All right, let's get that up to 100. Let's get that up to 100. But for the first live stream of the year, good turnout. Looking forward to getting back to work, and then people will see what we're doing, and we'll keep spreading organically. That's how it works. So hope you guys have a great rest of your week. Hope you guys have a great week ahead. Good luck and good trading. Speak with you guys later.